Brace yourselves, America. The IRS is coming, with new rules for 2025. Welcome back to our channel. Today we're diving into some crucial updates that could impact your finances significantly. Because let's be honest, when the IRS announces new rules, it's rarely a prelude to them sending you a pony. They're rolling out a fresh batch of regulations for 2025, and if you think you can just ignore them, well, you're in for a particularly unpleasant surprise. A surprise that might involve audits, penalties, or worst of all, having to actually understand tax law. It's a thrilling prospect, isn't it? Almost as thrilling as watching paint dry if the paint was also actively trying to take your money. So buckle up, buttercups, because this is important. Stay tuned as we break down the new IRS rules coming in 2025 that you absolutely need to know about. We'll try to make this as painless as possible, which, given the subject matter, is a bit like promising a root canal will be a delightful tickle. But we'll do our best, armed with facts, a healthy dose of skepticism, and the desperate hope that none of this applies to us personally. Spoiler, it probably does. Your paycheck's new math problem. Decoding the 2025 tax brackets. Alright, let's kick things off with everyone's favorite topic, tax brackets. For 2025, the IRS has decided to shuffle the deck a bit. Think of it as a game of musical chairs, but instead of a chair, you lose a percentage of your income. These adjustments are ostensibly to account for inflation. Now, for those of you in the lower income brackets, there might be a sliver of good news. The thresholds for these brackets are often adjusted upwards, meaning you might find a tiny bit more of your income taxed at a lower rate. But don't go planning that round-the-world cruise just yet. The operative word here is tiny. For middle-income earners, the picture is, as always, a bit more murky. The bracket adjustments here can be a mixed bag. Some might see a slight easing, while others might find themselves uncomfortably close to a higher bracket. And then we have the higher income earners. The IRS always has a special place in its heart, and its collection notices for you. While the percentages might not change dramatically, the income levels at which those top rates kick in are always a point of intense scrutiny. The key takeaway here is that these bracket changes aren't just numbers on a page, they directly impact your net pay. Understanding where you fall in these new brackets is the first step in not getting a nasty shock come tax season. It's crucial to remember that these are federal tax brackets. Your state, if it has an income tax, will have its own set of rules. So you're essentially playing multi-level chess with an opponent who makes up the rules as they go along. The Great Deduction Disappearing Act, and a few new tricks up Congress's sleeve. Deductions and credits. The magical little loopholes and incentives that taxpayers cling to like life rafts in a stormy sea of financial obligations. For 2025, expect the usual tinkering. Let's start with the standard deduction. The IRS usually adjusts this for inflation, so expect it to go up a bit. This is good news, as it means more of your income is shielded from tax without you having to do much. However, a higher standard deduction also means that fewer people will benefit from itemizing. Speaking of state and local taxes, or SALT, the cap on this deduction has been a political football for years. Remember that $10,000 limit? Well, depending on who's been whispering in Congress's ear, this could see changes. Then there are the credits. Tax credits are generally better than deductions because they reduce your tax bill dollar for dollar. We might see expansions or contractions of things like the child tax credit, the earned income tax credit, or various energy credits. One area to watch for new credits could be related to green initiatives, or perhaps even domestic manufacturing incentives. But with new credits often come new complexities. The eligibility rules can be labyrinthine, the phase-outs infuriating. And what about those deductions that might be disappearing or shrinking? Things like the mortgage interest deduction could see further limitations. The key here is to understand that the landscape of deductions and credits is constantly shifting. This is why tax software companies make so much money, and why tax professionals often look like they haven't slept since 1998. So as 2025 approaches, pay close attention to announcements about these changes. Because navigating these changes successfully can mean the difference between a manageable tax bill and an unexpected financial gut punch. Chapter 3: Crypto Chaos. The IRS wants its slice of your digital pie, and it's not asking nicely. Cryptocurrency. The digital Wild West where fortunes are made and lost faster than you can say blockchain. For 2025, the IRS is doubling down on its efforts to get a handle on crypto transactions. The big news here is likely to be enhanced reporting requirements. Expect more explicit rules about how exchanges and brokers must report your crypto activities directly to the IRS. This means the era of what the IRS doesn't know won't hurt it is rapidly coming to a close. This will likely involve new forms or new sections on existing forms specifically designed for crypto. The potential for confusion is immense, especially given the nature of crypto: decentralized, often anonymous, and traded across a bewildering array of platforms. One of the trickiest areas has always been calculating the cost basis for crypto. The IRS wants clarity, and they're likely to impose stricter rules or demand more detailed record keeping. And it's not just buying and selling. What about staking rewards, or getting paid in crypto, or using crypto to buy a pizza? Each of these can be a taxable event. The IRS is essentially saying, we don't care how impractical it is, just give us the data. The penalties for failing to report crypto income or for misreporting it are likely to become more severe as the IRS ramps up its enforcement efforts. Ultimately, if you're involved in cryptocurrency in any way, shape, or form, you need to be hyper-aware of these evolving rules. Chapter 4: Your Golden Years Just Got More Complicated. Retirement Rule. Rundown for 2025. Retirement accounts. Those magical vessels where you squirrel away money, hoping it grows into a comfortable nest egg for your golden years. For 2025, expect some tweaks to contribution limits, withdrawal rules, and maybe even the types of accounts available. First up, contribution limits for accounts like 401ks and IRAs. These usually get adjusted for inflation, so you'll likely be able to contribute a little bit more in 2025. This is generally good news, as it allows you to save more tax-deferred or tax-free money. Then there are the rules around required minimum distributions, or RMDs. These are the amounts the government forces you to start withdrawing from your traditional retirement accounts once you reach a certain age. There have been recent changes to RMD ages, and it's always possible these could be tweaked further. We might also see further developments related to the Secure Act and its successors. These pieces of legislation have brought significant changes to retirement planning. One area that could see more focus is automatic enrollment and automatic escalation in 401k plans. There could also be changes affecting Roth accounts. Roth IRAs and Roth 401ks are popular because your qualified withdrawals in retirement are tax-free. And let's not forget about catch-up contributions. If you're age 50 or older, you're generally allowed to contribute extra amounts to your retirement accounts. The key with retirement account changes is to stay informed about how they affect your specific situation and your long-term financial plan. So, as 2025 approaches, keep an ear to the ground for announcements from the IRS and financial news outlets about these retirement plan modifications. Chapter 5: The Taxman's New Toys. Unpacking 2025's penalties and enforcement measures. And now, for the part of our show that's guaranteed to send a shiver down your spine, new penalties and enforcement measures from the IRS. For 2025, with increased funding, the IRS is sharpening its tools. Expect increased enforcement on high-income earners and complex business structures. The IRS aims to audit wealthier individuals and corporations more frequently. Enhanced data analytics will power this increased enforcement. The IRS is using technology to identify patterns and red flags in tax returns. Penalties could also be adjusted. The IRS has a menu of penalties: failure to file, failure to pay, accuracy-related penalties, fraud penalties. We might see new penalties, especially in areas like cryptocurrency reporting. Another focus could be on promoters of abusive tax shelters or fraudulent schemes. The IRS often goes after not just the taxpayers who use these schemes, but the people who cook them up and sell them. The IRS might also be stepping up its efforts to collect unpaid taxes. This can involve liens on your property, levies on your bank accounts or wages, or even, in extreme cases, passport revocation. It's also worth noting that the IRS has been working to improve its customer service. With increased funding, they're aiming to answer more phone calls and provide better assistance. The key takeaway here is that compliance is more important than ever. The risks of non-compliance are increasing, both in terms of the likelihood of getting caught and the severity of the consequences. So what's the best defense against these new penalties and enforcement measures? It's simple, really. File your taxes accurately and on time. Stay informed, stay honest, and hopefully, stay off their radar. Chapter 6. Navigating the Tax Maze. Final thoughts and how to stay sane. Well, there you have it. A whirlwind tour through the upcoming joys of the 2025 IRS rule changes. It's a lot to take in, I know. It's complex, it's often frustrating, and it's about as much fun as a surprise audit conducted by a particularly grumpy badger. But knowledge is power, or at least a slightly less powerful form of bewilderment. Understanding these changes, from new tax brackets and deduction tweaks to crypto reporting and retirement account adjustments, is the first step in not letting them catch you off guard. Thanks for watching. We hope this breakdown has been somewhat illuminating, or at the very least, hasn't induced a full-blown panic attack. Make sure to like, subscribe, and hit the bell icon so you don't miss any of our future updates. We're here to help you navigate this financial minefield, armed with information and a healthy dose of gallows humor. Because if you don't laugh, you'll cry, and crying on your tax forms just makes the ink run. If you have any questions or need further clarification on any of these soul-crushingly complex topics, drop a comment below. Remember, the tax code is a living document, constantly evolving, usually in ways that benefit the people who write it. So stay informed and stay ahead of the game, or at least try not to fall too far behind. Good luck out there. You're going to